for my favorite part of the show. What'd that say? Talk to the audience? Oh, God, this is always death.
All right. So we were sent in a question from Christian about Nuran Wireless, and they were wondering if it could be a potential disruptor, and they compared it to BlackBerry or Shopify. Nuran Wireless is down 53% year to date and is currently trading at 64 cents on the dollar under the symbol NUR on the Canadian Securities Exchange. The company's product is Networks as a Service, or NAS. The company's researches, develops, and manufactures cellular network equipment, specifically radio access network equipment. The company is based out of Canada, but its primary operations are in Africa, including in Cameroon, the Democratic Republic of the Congo, and has recently installed its first site in South Sudan. As well, it has existing contracts for Namibia. I cannot talk right now. Sudan, the other Sudan, they split off in 2011, the original one. And then more African nations they are looking to expand into Latin America in the future. The company is currently not profitable, so to evaluate the company, you need to compare the potential versus the potential risk and the current risks. The company offers an extremely cost-effective way for rural and undeveloped regions of the world to access cellular networks. Nuran has a goal of achieving 10,000 sites by 2026, of which it currently has contracts for 4,124, and the company has current live sites of 101 and expects 400 of those sites to become live by the end of the year. Some rough math, so not exact by any means necessary, but it's good to gauge the overall growth trajectory. Using the midpoint of the two most recent contracts, the average per revenue per year site is 20,000 US, which would mean by 2026, and if the company is able to hit its goal of 10,000 sites, it would result in a forward yearly revenue of 200 million US, which is quite high, to say the least, for a market cap of 21 million Canadian. But this is because there's significant risk embedded in the company's operations. Nuran is operating in high-risk countries like South Sudan, which was in a state of civil war from its initial sovereignty in 2011 to 2022, with intermittent clashes still ongoing between the various groups. Severe conflicts can and will produce negative externalities, causing corporate operations in the area to be hindered and completely stopped in some cases. Whether something like this will happen and hinder Nuran is just speculation, but being conscious of the regional risk is important. Another significant risk is counterparty. Currently, the lion's share of Nuran's planned expansion is attributed to two contracts with two companies, MTN and Orange, and their various subsidiaries. If either of these companies has its own issues or relationships between them and Nuran break down, the growth of Nuran would be significantly slowed. Nuran is also needing to raise capital for its own operations, as it does not have actual cash flows to cover the current initial building and operations of these sites. It has access to some funding from public development funds, including the European Investment Bank, which is beneficial, but the company may need to dilute equity more, which it has in the past, if it is unable to acquire external funding. And lastly, just on a note on Christian's Disruptor comment, I wouldn't call them Disruptor, as they aren't really disrupting anything, they're building up something new. But I would call them an innovative company, just not disruptors, at least of yet.